What if I told you the entire narrative you've been fed about trading is a lie? The one that paints the big banks as your sworn enemy? What if I told you they don't hate you, they absolutely love you? Yes, you, the ambitious retail trader sitting behind that screen, trying to carve out your piece of the financial pie with your charts and your dreams of financial freedom. Sounds completely backward, right? We're taught to see the market as a battlefield. Us against the institutional Goliaths. But what if that's the wrong frame? What if it's not a war, but a farm? They aren't trying to destroy you, they're trying to you. They want you in the market. They need your orders, your liquidity, your predictable reactions. You are the fuel that powers their profit engine. Stay with me, because I'm not just going to tell you, I'm going to give you the blueprint to their operation. We'll dissect their playbook so you can stop being the prey and start thinking like the predator. Fair warning, this isn't another video about a magic indicator. This is a fundamental paradigm shift that will shatter your view of the markets forever. If you're ready to see behind the curtain, let's go. Every single day, millions of hopeful traders log into their accounts. They see the flashing charts, the promise of a life-changing trade, and think, today, I'll outsmart the market. But here's the brutal truth. The institutions on the other side of your trade already have a statistically probable model of how your session will end. Spoiler, it's not in your favor. Why? Because banks profit from how you trade. They don't make billions by predicting the future, they make it by engineering liquidity. They need a sea of smaller orders to trade against. That's where you come in. Retail accounts for only about 5–8% of Forex volume, but you are the most reliable, predictable source of counterparty liquidity they have. Why reliable? Because retail traders are the largest pool of consistent losers. Over 90% lose their entire starting capital within the first year. That's not an accident, it's a business model. So how do they maintain this incredibly profitable system? It begins with a masterfully constructed deception. Section 1. The illusion of opportunity. When you open MT4 or your broker app, you feel powerful. You think, I'm in the same market as the big players. But you are not playing the same game as the banks. They are the casino, and the house always wins. You're the gambler on the slot machines. Retail volume is tiny compared to institutions. And because retail loses consistently, banks profit reliably. Fees, spreads, slippage, all add up to steady bank revenue. If you think your broker is the enemy, wait till you see the bigger picture. Next, how they profit from your losses. This is where it gets dark. They call it a stop hunt, and it's perfectly legal. Watch closely. Let's get one thing straight. The big banks, the institutional giants, they don't care about your $100 trade. It's a drop in the ocean. What they do care about, what they study with forensic precision, is herd behavior. Because while one trader is unpredictable, thousands are not. Retail traders, fed the same textbook strategies, move like a herd. You buy the same breakouts. You place your stop losses at the exact same psychological levels. You become one large, predictable entity. And this predictability is their lifeblood. Banks are market makers. To execute their own colossal orders without moving the price against themselves, they need a massive pool of counterparties. They need a steady stream of people willing to take the other side of their trade, the retail herd. At their level, the game is different. They have technology and data you can only dream of. For them, the order flow map is a transparent blueprint of the market's intentions. They see where the orders are stacked. More importantly, they see the enormous pools of stop-loss orders. To them, your stop-loss isn't protection, it's a target. Let's walk through a classic scenario. It's a big news day. The market spikes, breaking a key resistance level. Every trading book screams buy, so you go long, placing your stop just below the breakout, feeling confident. For a few minutes it works. The trade goes into profit. You see the green numbers, feeling like you finally cracked the code. Then, boom! Out of nowhere, a single violent candle plunges down, erasing your gains and smashing through your stop loss. You're left staring at the screen, confused and frustrated. What happened wasn't random. While you were buying the breakout, a major institution needed to buy billions. But if they just placed a massive buy order, the price would skyrocket. So instead, they engineered a stop hunt, pushing the price down to trigger the thousands of stop-loss orders from traders like you. Your stop loss was a market sell order. All those sell orders created a fire sale, a wave of artificial liquidity the institution used to fill their huge buy order at a discount. And the moment their order is filled, the price rockets higher, in the direction you originally predicted, but without you. That's not bad luck, it's a calculated structural feature of the market. They engineer these moves when retail is most exposed. And the most insidious part, the system is designed to make you think it was your fault. You blame your strategy, your discipline, your psychology, so you go back to the drawing board, buying another course, searching for a holy grail that doesn't exist. You're told, use a better strategy, but they're selling you a solution to the wrong problem. The game isn't just hard, it's actively working against you. Think like a predator. They don't hunt randomly. They know where the prey gathers. In the market, these are the obvious technical levels. Previous highs and lows, round numbers, key moving averages. These are where stop-loss orders cluster, creating dense pockets of liquidity for them to hunt. Sweep the stops, fill the order, profit at scale. For them, your stop hunt is their liquidity creation. So why do they spend billions on advertising to encourage you to trade? Why do brokers offer massive leverage and easy signups? Because you are the fuel. The more traders they attract, the more liquidity is available. The more people taught the same basic strategies, the more predictable the herd becomes. More traders mean more stop losses to hunt, more panic to exploit. From their perspective, it's a brilliantly efficient business model. They've created a system where the public willingly provides the liquidity that guarantees their profits, and the engine that drives this entire operation is the marketing machine. Ads everywhere. Start trading today, make money from home. Influencers and educators push strategies that look good on camera. Brokers burn millions to keep you trading. More retail equals sign more reliable liquidity and revenue for banks. They don't want your account wiped out immediately. They want you hopeful enough to keep depositing. Some educators are part of this cycle, knowingly or not. This isn't a conspiracy, it's brilliant business. How do you stop being easy liquidity for the market sharks? It starts with a fundamental shift. You must master the language of the market, its structure and its relentless hunt for liquidity. This isn't just drawing lines, it's about seeing where the money is hiding, where stop losses are clustered, and where institutions are planning their next strike. This is the foundational blueprint for survival. First, kill the impulse to chase price. That frantic FOMO is your prey instinct, and it's a trap. Professionals don't chase, they anticipate, waiting for price to come to their predefined zones. Second, be wary of news spikes. That violent wick isn't a clear move. It's a surgical strike designed to engineer liquidity by hunting stops. Unless you understand this manipulation, you're just gambling. This leads to the most critical mindset shift. Trade the institutions, not against them. Think like the hunter, not the herd. A hunter studies behavior, finds weakness, and strikes with precision. Your job is to identify where the retail herd is vulnerable. Here's a pro tip. Banks target the exact zones where retail traders predictably place their stops, just below support, just above resistance. These obvious levels become magnets for price. Your mission is to identify these traps before they spring. When you see price approaching a clean level, see a potential stop hunt. That rapid push through the level, followed by an aggressive reversal, that's the trap in action. The antidote is powerful. Use higher time frame structure to see the big picture. Watch the key liquidity areas you've mapped out. And size your positions like an institution, with small, disciplined entries, not emotional gambles. Remember, big banks don't hate you, they need you. You provide the liquidity that fills their massive orders. The goal isn't to fight them, it's to stop feeding them. If this opened your eyes, smash like, subscribe, and share this with every trader you know. Want more? Next video, I'll expose the biggest Forex myth keeping traders broke. The next move is yours. Play smart, not prey.